Hello and welcome back. The international carry trade is where speculators borrow money in countries with low interest rates and reinvest it in high interest rate countries. Recently, many have warned that this trade could destabilize the global financial system. Many, including People and Power's Max Kaiser.
So, we're in a world in which speculators are making money by borrowing virtually free money from Japan or Switzerland and investing it in markets, assets, and currencies around the globe. And the man on the street is, quote-unquote, getting rich from the asset bubbles caused by all this borrowing. Asset prices have never been higher, but debt loads have never been even higher still. So how long can this laissez-faire tale last?
The carry trade revolves around being able to borrow an asset, and when you've borrowed it, you sell it. You take the proceeds from that, you invest it in another higher yielding asset. But of course the key consideration when going into the carry trade is that the asset that you're borrowing, you're effectively shorting it, that asset's not going to go up in value.
That's right, this carry trade scheme does have one potentially lethal problem. It's called unwinding. If the borrowed asset, in this case the yen or Swiss franc, starts to go up in value, the carry trade stops working because the cost of the original loan goes up. So everyone around the world, the bankers, the investors, and the speculators, tries to cash in their inflated stocks, bonds, currency, and real estate investments at the same time in order to pay off that low interest rate debt before it rises further in value. It is a run on the global banking system, an extremely ugly situation, and warnings about this unwinding are coming fast and furious from central bankers around the world.
Jean-Claude Trichet, the head of the European Central Bank, said in February of 2007, quote, one-way bets, and of course by this he means the carry trade, in the present circumstances would not be, it seems to us, appropriate. We want the markets to be aware of the risks they contain. Malcolm Knight, General Manager of the Bank of International Settlements, the central bank of central banks, quote, there is a rising leverage in the financial system, and we have some very crowded trades in some areas of the foreign exchange markets. Mr. Knight said, speaking at the World Economic Forum in Davos, quote, together these could create the potential for a very rapid repricing in financial markets. Crowded trades. Well, this is Fed speak. Crowded trades in this sense means that, according to the bankers who run the banking establishments, maybe there's not enough suckers left to make this thing really work. So he's telegraphing for those in the market to maybe get out of the market now.
The most famous case of yen carry trade unwinding we've had occurred in 1998 at the time of Russia, when Russia defaulted on its debt, and a large investment fund called Long-Term Capital Management basically went bankrupt, and that triggered in markets an unwinding of carry trades at that time, and the yen appreciated extremely rapidly when that happened, and some people have been concerned that we could have a repeat of that this time. But I think if I'm correct, then and not just me but some others as well are correct, the size of the carry trade now is much larger than it was then.
But it's been a fairly substantial trade over the last few years. It will be, it could have global ramifications, there's no doubt about it. But it does revolve around one key question. What is the size of this trade? And quite frankly, we don't really know, because discerning and splitting out the genuine trade-related activities in borrowing yen and if you like, the speculative, because the carry trade is simply a speculative activity. Until we can split those out and get the data sets on those adequate, we don't know. But I think there are signs out there that there are worries in the global economy.
Analysts, economists, central bankers, and politicians are warning us of the dangers of an unwinding carry trade and one-way bets. So why do speculators and investors keep playing recklessly in the carry trade traffic?
People are perceiving that there isn't that much risk in doing this borrowing in low interest rate currencies. The risk of a rapid exchange rate movement occurring in a short space of time isn't very high. And I think an important factor that has contributed to that is past intervention in the currency markets by central banks, particularly, and we're talking about the yen carry trade, the intervention that the Ministry of Finance and Bank of Japan did over 2003-2004, when the yen would have risen substantially at that time, but the Bank of Japan, on the orders of the Ministry of Finance in Japan, stepped into the market and prevented the yen moving above about the 104, 105 rate when it was going up.
And currency speculation didn't really come to Iceland until about 2 years ago. Before the time, it was basically unknown.
Market intervention. That's just another word for market manipulation. These bankers are keen to keep rates low by making credit available, but they have two very devastating effects on the global economy. Number one, they are penalizing workers whose pension funds are being put at risk, and they're also making it impossible for the natural supply and demand curve to come into sync in the global markets, and debt is building up like hot magma of hot money. It may look tranquil, but once it blows, look out. And the volcano, the famous volcano, when was the last time it erupted?
Hekla.
Yes, Hekla.
Usually we get some kind of volcanic eruption like every third or fourth year here.
Oh, really? Is there one due at Hekla?
Well, there are actually several too.
Really? So when Hekla blows, is there a counterparty risk somewhere that's going to mitigate that lava flow?
Oh yeah, but the area around Hekla is actually deserted.
So a lot of people build houses right under Hekla, right in that area.
Not really. I mean, it's.
Would you build a house there?
I haven't really looked at the area. It's not my.
Given the risk that the volcano could blow, would it be a good idea to build a house in the foothills of Hekla?
I see that you have a very good practice in those questions, actually. No, not really. I mean, most of the volcanoes in Iceland, they're actually on. You know that the Iceland is actually situated on the ridge between.
Are you going to tell me that the volcanoes are not dangerous? That I should just.
If you stay, away from them, but they actually can actually present a great hazard. Like in 1783, we had a huge volcanic eruption.
Right.
And after that, about 20% of the population died. And actually, some people say.
What percentage of the population died?
About 20%.
In what year?
1783.
1783.
Yes.
Now that was before a lot of these derivative contracts.
Oh yes, that was before. Some people actually say that the French Revolution actually happened because of this volcanic eruption.
Why is that?
Because then you had dark skies in Europe and bad harvest.
Would the people in Europe you think the people in Europe would ever want to revolt again if they thought that their banking community was treating them like feudal lords, catering to speculative, buccaneering interest rate arbitrageurs instead of maybe servicing their needs as a democratic people?
That is a good question. You should ask Le Pen or some other figure.
Le Pen?
Yeah.
Financial analysts and bankers argue that the financial carry trade must be allowed to continue because we almost enjoy the wealth and asset appreciation that it creates. But the wealth and asset creation is the result of massive yen carry trade. So their arguments are specious at best, and it's doing a lot of damage along the way to the workers, the savers, and the global economy, which is exposed to way too much risk.
Our view is simply that the central banks of the world have been putting off the day of reckoning. Their interest rate environment has enabled them to sustain this. The buying up, for example, of US debt has been a key component, the key pillar globally of these imbalances that have emerged. But the longer they delay this, the more serious the day of reckoning is going to be, and it will come.
Well, here we are back on a high street in London. What did we learn from all of this? Well, what we know is that the Icelandic krona is the global financial currency of the month, the flavor of the month club. Hot money in, my guess is going to see hot money out. Thailand, remember that in the late 90s? Didn't last. And of course, what will happen to all of these brokers and bankers and private equity groups and hedge fund managers. Once the party's over, the punch bowl is taken away, and Iceland no longer has the hot currency of the month.
And that was Max Kaiser from Iceland. Do you believe that the global financial system is stable, or do you worry that few of us really know what's going on in the financial world? Either way, we'd love to hear from you on aljazeera.net/English. That's it for the program. Until next time, goodbye.